what I then do, I group all of the columns that I'm going to use. So I eliminate those that are not used, which are applicable, once again, usually to the S&P 500. Then what I did, I color-coded for each, this is a strategy, I color-coded and picked out, based upon the color here, the best rating is blue, next second best is green, third is yellow, and the bottom, the worst characteristic for that strategy, for that characteristic is in red. So for instance, up here, I wonder if we could move that projector to get just a little, oh good, there we go, now we're cooking. Maybe I better start from the beginning. No.
When you get back to your slides, we'll have to move it back where it was.
Okay, thank you. So these are all ETFs. So for instance, using the score that is in the software, they base it the best on the highest score. So the highest score here is 195. The worst score is 101. So I picked out the 4 colors in each column. And then I'm going to take all of this information and I'm going to sort it. So, for instance, under score, the best, I just showed you, is 195. The worst is 101. These will always be the highest because that's the safety score that is used for sorting of the data in the tab itself, in this case, the ETF tab. Then I look at each of these characteristics that are left that I feel are important. The number of trades, the least in this case, to me, is the best. The least often you trade is better than the most. But I put a question mark here because some people like to trade more often. They might pick the one that has the most frequent trades, saying the more I trade, the more money I can make. So it's up to you, personal choice there. The strategy maximum return, the maximum return for the strategy per year ranges from 39% down to 20%. I think most of us with ETFs would be happy with an annual return of 20% year in, year out for the last 13 years. On a 10-year basis, it ranges from 45% annual return to 25%. Once again, that's pretty good. The top, 81% on a 3-year return to the lowest of 22%. Excellent high 70% returns. 20% is still, I think, okay. So far we're doing good. Look at this, 80.7% strategy return in 1 year. Would you all like to make 80% 1 year? However, the worst value is 4.3%. Don't know. We'd have to investigate what caused that 4.31%. That seems low. We'd like something better than that. Looking at StormGuard, it's working. 3.3 to 0.5. It's working. I wouldn't really look at that too much.
What does that mean? What does that number mean?
StormGuard, does anyone explain that to me? StormGuard is, go ahead. John.
So this is interesting. I haven't seen this before.
Yes.
So StormGuard. So was this Gary that asked the question?
Yeah,
Well, I
Gary.
think the presentation last time you were here on StormGuard, right?
Yeah, but I'm not sure in this context what we're comparing here.
Well, he's pulling the value that's just the StormGuard for that particular strategy, right? So for each different strategies, the StormGuard is adjusted, right, to that particular strategy. And the number, go back to the, but go back to the other one. So the this value represents a percent change in a month. Okay, so if StormGuard is 3.3, that roughly relates to saying that large cap stocks are moving 3.3 or up 3.3% over a month. But that's within the model that StormGuard that StormGuard is based on. So if you just look at a chart of, large cap stocks, you won't necessarily see that, okay? Because it's not like he just picked it off the chart. It's within the model that he gets that. And he does that, that's the same number that he gets when he ranks all of the other set funds within your strategy, it's a number like that. So what I had not noticed before, but it's interesting here, is that there's such a wide range, because generally I've seen StormGuard to be, it depends, it can go quite high if you just look at the chart. It has quite a range, and of course it can go negative. So if it goes below 0, he will bail you out of your stocks. But the 3.3 is indicating that that particular strategy is doing really well, so he gives you a lot of headroom, okay, before he sells.
So it's like an ATR, like an ATR type of thing, or?
No, it's not, but
Well, but
he's
a
boosting.
volatility measure.
No, it's not about,
Okay.
it's not a volatility measure, it's a matter of what the performance of your strategy is. So let's say, for sake of argument, whenever one of these was done, the raw value of StormGuard was 1.5. If your strategy is doing really well, he apparently boosts it all, quite a bit up. And if it's doing poorly, as in this worst value, he lowers it down. So what he's trying to do is he's trying to bail you out of your stocks by lowering it for this worst value. He's trying to keep you in your ETFs by raising it for the best value. I just never had noticed such a wide range. I always thought it was the fluctuations were within, let's say, about 0.5%. But this is indicating it's 3%. So much bigger than I thought.
Could we say it's a black box algorithm, which when less than 1% basically suggests taking you out of that strategy?
No, it's less than 0.
Less than 0, I'm sorry.
Less than 0.
Less than 0. So as long as it's above 0, you're still in that strategy using the StormGuard black box algorithm. Alpha, they're all above 0. Beta, they're close to 1, so they're closely following the market. Not the worst case, of course. The probability of a 15% drawdown. That's what we want to look at. What is the probability of having a 15% or more loss, I should say. Look at this. Under the best value, or the best strategy, is 0%. This seems very low, and I think we're going to hear later this evening, you might want to be on guard when you see a 0% probability of a 15% loss. Also, strategy max drawdown, the best is 22%. So the question is, can you handle a 22% drawdown in your strategy? Of course, that's better than the S&P, which is about 55%, but still, it's quite a drawdown. The worst drawdown was 35%. The real strategy, real drawdown was 0% up to 37%. Once again, we might hear tonight how 0% drawdowns might be unrealistic. Sharp, from 23 down to 2. This is the return over safe money market value. And the strategy Sharp runs from 140% up down to 66%. So the strategy Sharp is definitely better than the reference Sharp. But anyway, so this gives you an idea of how you can take data that's in the Excel spreadsheet and do some analysis.